Since becoming CEO of Man Group, you've grown the firm's assets to about 175 billion, I believe. What is your strategy to grow that from here, and how do you differentiate the firm in a very competitive environment for investor dollars?
Thank you for having me. Good morning, everyone. This is a time when I think the alternative investment management space has everything to play for. It's a time when clients need us more. It's a time when we're coming out of this rather benign environment where you had, as asset holders, everything just held onto it and you'd be fine. We're now in states of volatility and dispersion. And so how do you grow? How do you service your clients? One, you ensure you're relevant to them. You know that they need more from you. The more diversified the content you have, the better for them. The more you're able to find solutions for them and answers for them that actually address the questions and the challenges that they are living through. And you do that by looking at your ability to have that orthogonal or uncorrelated content and capability that delivers returns to them through these different economic cycles that we're now living through. So how do you grow your assets? You listen to your clients, you make sure you're relevant to them, you grow your capabilities to deliver that to them, and it's hard work, but that's what you have to do.
How important is scale, and what are you hearing from them on that front?
There's definitely a consolidation. There's a consolidation both at allocators but also at investment managers. That thing where you say, I need to face fewer managers who can help me do more. So that consolidation is there. So scale matters in the sense of being able to deliver all of that capability to them. And it matters in the way that you build your organization so you are able to deliver what you deliver without reducing the alpha that you've captured. So it's no good finding this very elusive thing called alpha and outperformance only to lose it through your own inefficiencies. So scale and capability, your operating platform, which might not sound the most exciting thing for us all to talk about, but happens to be incredibly important, is the thing that I think is important in that scale debate or that conversation too. So can you deliver what you have at scale efficiently and return as much alpha to clients as possible without losing it through your own inefficiencies? And
does that mean diversification too? I mean, is in terms of something people are really seeking with that scale?
Yeah, I think that's right. The answer for many people right now is to have a portfolio constructed in a way that navigates these ups and downs. And in some instances, you're going to see there's a tendency perhaps to think of us all as trying to pitch one thing or one thing only. You know, here's a fund and you should buy my fund. I'm not sure it should work like that anymore. I think as you think about portfolios, you should think about what you're trying to achieve through time. So there's a temporal issue here, there's a cycle issue here, there's a longevity issue here, there's a scale issue here. And normally you want to think about a portfolio that does something that is capable of thinking about all of those different inflection points. So, you know, I'm not a passive player, but is passive a part of a portfolio? For sure. I'm not a private equity investor. Do I think that private equity has a role to play in a portfolio? Yes. But I think there are plenty of things that need to happen in between those things in the alternative investment space as well.
With that in mind, what do you see happening in the environment for fees? I mean, you brought up passive. I mean, what's your outlook for margins for your business?
I think the reality is in the highly commoditized liquid spaces, think long-only equities, there is definitely fee pressure in that space. But not all things are created equal. So if you are a passive player, you'll pay a certain level of fees. But if you're an active long-only player, you'll have something different. And there is no direction of travel there. So there's a sense that saying, are all clients moving from active to passive? Answer, no. Are some clients moving active to passive? Yes. Are some clients and allocators moving passive to active? Absolutely. The more you go through into active or alternative investment management, the more you're trying to find and have outperformance. Clients pay for that. They also pay for and are willing to sit at the table with you as you provide them with solutions. So a shape of problem looks like this, how do we come up with something that fits that with you? That partnership of providing content that is able to fit a portfolio. I think it's more than that as well. I think clients want to work with you when you deliver more than just your investment capabilities. We're in a world where we also have a part of our business at Man Group where we have been allocators. We have had a fund of fund business for 30 odd years. We have tools that we have used ourselves that our clients can now benefit from in portfolio construction and risk management. You're delivering much more of your organisations to your clients. And if you're not able to, I think that's a challenge. And I think clients should want that. I think allocators should want to sit at the table with you and they should ask you for more and you should be able to deliver that to them.
So you brought up consolidation in the asset management space.
Yep.
Man does have a history of being acquisitive in its, well, very long, more than 240-year history.
Yep. Yes.
And last year you bought a stake in a private credit firm, I do believe.
Correct.
I mean, there's a lot happening in the space. How do you see participating in it? Are you interested in buying anything else?
Yes, is the short answer, I guess. So acquisitions absolutely have been part of Man Group's history. It's something we think we do well. And we do it well because we have some very clear guidelines on how we think about it. We think about it as something that, again, I'm going to sound a bit like a broken record, but it's about having additional content and capability. It's about providing more to clients. And so when we transacted and we bought Varagon, we wanted a private credit capability. This was a business that was tremendously exciting, sponsored about middle market lending in the US. It's a great point in the cycle. It's a scalable business with a tremendous culture which can benefit from the operating capabilities that we have at Man Group. You're going to find us thinking about opportunities like that, but you will also find us growing organically our business. So, between our private and public credit business, we're north of $30 billion. And you can see that that matters to clients. I talk about clients all the time because they feed both how smart we can be. The danger is if you think that we can all turn up and sit at the table and come up with the singularly brilliant idea, that'd be great, and maybe we can do that from time to time. But actually the benefit is to have the brightest minds in the room, and that's between my firm and with everybody that we work for and with, to come up with that nugget of brilliance. And in listening to clients and being responsive to clients, it's about growing content, capability, asset classes that can answer their questions and be part of answering some of the navigation points we have today. It isn't straightforward out there. So we're going to see Man Group will grow through organic growth, through acqui-hires. If we can find acquisitions that are genuinely additive to us and accretive to us and to our clients, we'll do that. But it's a constant thing that you need to have at the front of your mind.
So as you look across your business, what products would you be most interested in potentially growing through acquisition? Are there any gaps that you see you'd like to build? Or
I think that it's a great question. It's one of those ones, though, that suggests that somehow there's a menu from which I can choose from at any opportune time. Wouldn't that be nice? That doesn't work like that, unless, if you know better, please let me know. So it is about assessing what's out there today and what's available at the right multiple, at the right price, with the right scale, with the right culture. What I will tell you is it won't be something that we currently do. It will be something that adds uncorrelated content or capability for us. And when I say for us, I mean for clients. So what would I be interested in looking for? Do I like credit? I think credit's a cracking opportunity still out there. Can I grow it? Yes. Could I buy it? If I can find the right thing, for sure. What I won't be after in this space is something which you can't scale. I think that there are very smart people in this audience today and very smart people sitting in my firm. And we can all get quite excited by small and niche businesses that do really funky and fantastic things. We can all be slightly distracted by them, and and it's brilliant, by the way. It's not to suggest they're not valuable. But if you can't deploy them at scale, that's less good for allocators who are trying to put money to work. So it's about having discipline in this space as much as anything else.
What about Man Group itself as a potential target? What do you think?
I think that I sit in this rarefied position of the CEO of this business, and it's a cracking business. It's been around for a while, you just mentioned, and my job, apart from anything, is to make sure that it is around for a lot longer. It is full of smart, capable people. We have a diversity of content that is exciting and provides answers. So my focus is less on that question and much more on how I continue to grow this business. I do not come into work every day and think, I know, is somebody going to knock on a door today? I come into work every day and I think, what can I do for my clients?
So you brought up the people. We've talked about the competition for assets.
Yeah.
How fierce is the competition right now for talent in your business?
Huge, massive. It's always going to be that way. The competition is in every part. If you want the very best people, you have to recognise that you have to provide them with an environment and a space and an offer that makes them feel great about coming into work every day. So the competition is fierce, but actually I feel quite good about Man's positioning. So from a discretionary or fundamental investing perspective, do the platforms have an attention of war, of a tug of war of great capability? Absolutely. But are there things that make it different? Is this just about money at the end of the day? Listen, we work in financial services. There's a value proposition here that everybody lives with. But I would wager that most people in this audience, if not everybody, could go and get another job tomorrow. Maybe they could go and get a slight increase in their comp tomorrow. But most people in this audience will also think about the culture they want to live in, the value set they're alongside, whether they can grow their capability in their business. If you're an investor, whether you have sources of capital that come from more than one place. You'll think about the tech that you have, the operating platform you have, the access to clients you have. You'll think about whether you want a global stage or not. In other words, this talent piece is not a binary thing either. If you're a technologist, you like dealing. My experience, we have about 650 of them, self-identified technologists in some form or other, quants or data scientists or modelers or developers. They love being and having access to the very best technology. They want to be put in a box, and they love solving real-world problems and challenges. That's what we do every day when we come to work. So you're giving the brightest minds the best capability to solve real-world issues that are very, very hard. That's exciting. And if you do so in Man Group in the way that we do, which is in an open architected way, so there's this thing called GitHub. If you haven't seen it, go look it up. It's quite exciting. Technologists get very excited by it. So GitHub is effectively like it's like one of those things where you do Travelocity thing. That sort of you assess whether something's been good or not, and you get stars and ratings by how much you've shared in this open architected world. And the GitHub rating for Man Group is ridiculously high for an asset manager. I mean, it's higher than most investment banks. That's because our developers are out there in that community, in an open architected space, getting access to the smartest minds to fix real problems. So it's a long-winded way of answering a question, which is the competition fierce for talent? Yes. But is there a really exciting opportunity set in there where if you want to attract the brightest and the best and retain them and inspire them because we need them to do our job every day, you can do that.
Mm-hmm. So you brought up technology, and obviously Man has a long history and it's very much known for its technology. I mean, how are you thinking about AI, both changing the investment industry right now and specifically Man going forward?
So AI, we sort of started to talk about it like it's a brand new thing, haven't we?
Yes.
It's just not a brand new thing. And there's a bid offer at Man Group at the moment of whether it's 10 to 15 years that we've been using AI. So not new. ChatGPT, that's a newish thing. We have now Man GPT. That's very, you can tell who maybe named that. Technologists aren't necessarily good at exciting new names. Anyway, so Man GPT. And we use any advanced technology, but we've been using machine learning. We have this a relationship and have had a long relationship with Oxford University, Oxford Man Institute, where we've been at the forefront of machine learning and AI more generally. We use NLP, we use large language models. We are looking at lots of efficiency that come out of this generative AI space. You'll hear about co-piloting. Let's be clear, when you have co-piloting, you effectively allow the AI to help you develop your coding, right? Our pickup level is probably about 20% of that's suggested in the co-pilot coding, okay? Just by way of a reference point. Does it help you combine non-linear signals more quickly and more effectively than you've been able to before? Yeah. Does it allow you to have smarter sentiment analysis? Absolutely. Do we have robotics through our operations functions? I can give you any number of different use cases of how we deploy this technology, all away from actually the other stuff we do, which is looking at data signals, looking at tick capability, looking at the ability to find alpha or new markets or more opportunities in that space. What I'm telling you, though, is not making investment decisions.
I was going to say, what are its limitations from your standpoint?
There are a few of them, right? I mean, the wonderful thing about having 650 plus technologists and 35 years of heritage in this space is you have really skilled people who know both the capabilities of these tools and also know the limitations. And that's incredibly important. You've probably heard of hallucination, and in this context, not in the context you might have heard of it in a desert, but within this context too. So the interesting thing about generative AI is it wants to please you. It's a bit like a puppy. You know, if you throw it a stick and it goes and collects the stick and it comes back. So, and then you say, but it's the wrong stick, and it goes, okay, I'll go and find you another stick, and it goes and gets you another stick, and then you say, no, it's still the wrong stick, and off it goes again. It does that. So it fills gaps for you. I suppose the way I think about it is this. There are tremendous skills and capabilities in technology that have been developed for other industries. You have the most extraordinary neurosurgeons out there using these most skilled tools now, which reduce the margins of error. However good that technology and that capability is, you still do not want me operating on you. I would suggest that would be a bad outcome for you and probably for me. The skill of these tools is to be able to put them in the hands of people who understand them, who can use them and understand their limitations. So are we excited by new tools? Every day of the week. Will there be a next one, a new one next year and the year after? Mm-hmm. And will we adopt them? For sure. And do I have high confidence in the people that I have sitting at Man Group who know how to use them for the benefit of our clients and know when to stop using them because they no longer provide benefit? Every day.
So as you think about your outlook, this is our last question here. I know we're running out of time. For next year,
yeah.
What are the biggest risks to the upside and the downside from your perspective?
I think it's a fabulous question that makes me sound like I can predict a market, which none of us have been able to do across the entire market, across the entire space, I suppose. What I think is more important is that we're looking down the lens of a space where we've had a lot of speculative issues this year. And we have a little bit more certainty next year. So, half the world's population of the Western world went to the polls this year. We had this tiny election in November.
Tiny. Yes.
Tiny. We've got still some major conflicts raging. As we look through to 25, maybe we have some more certainty. We have more clarity about what policy might come through. You certainly have some planning that's been set out most recently in the US, which is going to be instructive. But to suggest I know where the market's going to go, can't do that for you. Can tell you it's all of our jobs to ensure that we are prepared to navigate what we see coming forward. And for me and for Man Group, it's about ensuring that we do our very best job to return outperformance to our clients through whatever the market cycles bring.